Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Kansas City and Minneapolis wheat markets. I'll start with Kansas City wheat. It was here on this contract 2 weeks ago, just 2 weeks ago, 2 weeks ago that I first, in hindsight, saw what was a fairly obvious April to date head and shoulders pattern. The neckline had been just below most of the very recent market action, and that's currently at 11.54. In my commentary that week, I said, and I quote, "Of all days, today, this neckline is being tested, and it seems to be a very important test." Now, head and shoulders patterns are traditionally seen as topping actions, and this one would fit the bill, but sometimes they turn out to be bullish continuation patterns. Thus, take care in case it does turn out to be a bullish continuation pattern. However, just in case, I will place I'll place two prospective targets below. A primary target X would be in the 998 area, and a secondary target X1 would be the 863 area. Please note that these two are just prospective targets that I have placed just because the market has breached and not broken as yet the neckline of this head and shoulders pattern. I will leave you with the same thoughts I have over these past few weeks. Please just remember, between 10.01 and 9.57 we have some very heavy duty supports dating from 2011 and 2012. It is these that are underpinning the current market and its rises, and they will not be easy to dislodge. End of quote. Well, there's a lot there to process. For starters, Friday 2 weeks ago did indeed see the breaking of the neckline. Monday last week saw a move down through the rising medium moving average, currently 10.98, plus the 50% Fibonacci of the whole of 2022 at 10.64. Last Friday, we saw prices reach down and enter what I suppose to be a pretty heavy-duty congestion zone between 10.01 to 9.57. After two indecisive sessions, prices yesterday made a bearish closing long black Mariposa and closed below it, just above the rising long moving average. That's currently at 9.45. Today prices rose up to the congestion area overhead and promptly fell away again, this time punching down clear through the rising long moving average and into a fairly clear zone down towards the 50% Fibonacci of the August 20, May 21 move at 900. In all this process, we've had the target X in the 998 area and introduced last week target X2 in the 970 area. Both have been filled. Target X2 was the target on the downside for the May high to date action, acting as a bearish halfway hesitation. One thing I'd like to ponder upon is the state of the congestion between 10.01 and 9.57. I thought it would be quite heavy duty, and we did see some hold up to the market in late May. However, on the way up it didn't look that great, and now on the move down doesn't look that great either. I think I will ponder on the efficacy of this region a little longer, though I warn you, I may just retire them. So what's next? Well, after the 50% Fibonacci line at 900, we have another 50% Fibonacci line at 881 from the September 2019 to May 22 move. And then we reach target X1, the harder to reach target, the harder to reach secondary target from the head and shoulders top. I'll then reassess the situation, assuming prices get down there and aren't derailed in the meantime. Minneapolis wheat. Okay, last week I started my weekly commentary thus, and I quote, "First off, the March 2021 to January 2022 bullish Andrews pitchfork, which has been so influential in pointing the way higher for so long, has been breached and likely broken. I suspect that I will be retiring it before the next commentary." End of quote. Well, it is true that this particular pitchfork has been broken, but I thought I'd leave it on after this and retire it after this commentary, finally retire it, so you can have some context and see how big a move down we've had. Okay, just so to recap what has happened and why we are down here. We'll now refer to what I call the juicy bits from my commentary from 2 weeks ago. And I quote, "I've previously seen in Kansas City wheat, though not so clear in Chicago wheat, a big head and shoulders pattern almost formed since about mid-April. Minneapolis wheat is similar. The differences here are not so pronounced as you would think, but we do have some differences. For example, the left shoulder is split and the right shoulder is diminutive. Nevertheless, I've drawn a neckline currently at 1225, which is closely allied right now to the rising short-medium moving average. This neckline has been tested since this past Wednesday and today. So that is Wednesday and Friday from 2 weeks ago. We have started to punch down through it, and this is just the very first day. So it's by no means confirmed. And also, please remember, though head and shoulders patterns are usually seen as bearish reversal topping actions, and that would fit in with this scenario, they can also be bullish continuation patterns. However, that all being said, I feel obliged to set out a prospective primary target X in the 1089 area and a secondary and harder to get target X1 in the 973 area. These are big asks of the market, as the first one, target X, would see the market on the very edge of the current market driver, the April 21 to January 22 bullish Andrews pitchfork, and target X1 would see the market clean out of it. And that's the end of the quote. Okay, I hope you got that all. Well, last week prices reached down to the primary target X in the 1089 area. Then this week we saw prices reach down to target X2 in the 1033 area. This is the bearish halfway hesitation stroke bear flag type action seen since the height of May. And then today the market reached and exceeded target X1 in the 973 area. That's the secondary harder to get target for head and shoulders top pattern. Thus, all three downside targets for all the bearish patterns I have seen have been achieved. So where do we go now? Well, we have limited support below now until the 900 area and the January low also at 872. Even then, I suggest that these may be suspect to any sustained bearish pressure. I think it will require some more contemplation on my part to see what is next. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.